Gentlemen, take your places. We're ready to roll. I practiced. Okay, welcome everybody to the Administrative Policy Committee meeting. So I'm going to begin by calling our public meeting to order. So the Administrative Policies Committee will host a public meeting at 6 p.m. on Thursday, July 6, 2023, to consider tax write-offs pursuant to sections 357 and 358 of the Municipal Act 2001. Are there any public comments? Okay.
Seeing none, Madam Chair.
Okay, great. With that in mind, then, we will call the public meeting closed and note the time, please. Still 6 p.m. Fastest meeting I've ever had. All right. Hang on to that thought. We'll get there. Okay, so we're going to call our meeting to order. Can I get someone to please approve the agenda? I need a mover and a seconder. All right, Councillor Amos and Councillor Ridge. So now I've done my two ends here, my two bookends. So I'm hoping everyone's in favor. All in favor? Great, thank you. All right, so next I need confirmation of the minutes from the Administrative Policy meeting held Thursday, February 23rd, 2023. So a mover and a seconder. So Councillor Shaves and Councillor McLaren, all in favor? Excellent. Any disclosures of pecuniary interest? Okay, seeing none. We have no delegations. We do have a briefing, but that will occur later on. So I'm just noting that we'll do that once we actually get to talking about our financial position. So we're now on to our next section, Section 8. So the Rita Crest Home Board of Management. So I'm going to ask for a mover and seconder so that the Administrative Policy Committee resolves itself into the Board of the Management for Rita Crest Home. So a mover and a seconder, Councillor McLaren and Councillor Ridge, all in favor? Okay, thank you. So I'm now going to ask Ms. Keys to please step forward and address anything she'd like to address.
Thank you, and good evening. This is the second report that is provided to the Rita Crest Board of Management for 2023. It is quite a lengthy report, as it does contain information on operations of the home from the time period of January 1st through till mid-June of this year. During this period, the home has maintained an overall occupancy rate of just over 97%. The wait list continues to grow, and as of May 31st, there was 545 people seeking admission to Rita Crest Home. In the first half of the year, there were 22 incidents reportable to the Ministry of Health and Long-Term Care, 10 of which were related to outbreaks, 4 were COVID-related, all of which took place in January, 1 enteric and 5 respiratory outbreaks. The other 12 incidents were related to residents. During this reporting period, we did see the Ministry of Health and Long-Term Care come into the home on 2 occasions. Of those 2 occasions, the home did receive 1 non-compliance with a written notification, which was remedied on site for the first visit. The second visit, there was a second written notification for the safe storage of drugs. On April 11th, the finalized amendments to the regulations of the Fixing Long-Term Care Act of 2021 came into force. The amendments within the regulation included staffing qualification changes, modernizing medication management and drug administration requirements, and bolstering the resident experience and safety through air conditioning requirements and clarification of falls prevention and management, as well as skin and wound care. Of the amendments made, there was little to no impact on our home. We have not changed our staffing qualifications or drug administration procedures at this time, as we are not seeing the recruitment challenges that some homes are experiencing. As well, prior to the amendments to the regulations, the home did have policies already implemented, which did incorporate updates made to the falls, medication management, and skin and wound care. The home is also compliant by being fully air conditioned. You will note in this report that there were COVID-19 guideline changes from the province that were effective in March 31st. I am happy to report that there has been further additional changes and updates which were effective as of June 30th, which was just last week. The recent updates included changes to masking, social distancing, infection prevention and control audits, and COVID-19 isolation requirements. The home implemented the new guidelines on June 28th, and staff, visitors, and caregivers are no longer required to wear a mask while in the home. However, masks are available for those that continue to want to wear one. As well, there's no longer social distancing requirements for staff, residents, or caregivers while in the home, including group programming and dining. The home is no longer testing staff when COVID-19 symptoms are present and are only requiring standard respiratory precautions, which include remaining out of the workplace until 24 hours symptom-free. However, masks will be worn when back to the first day of symptom onset for 10 full days. These changes are, as you can imagine, very much welcomed after 3 long years. The approved 2023 operating budget for Reader Crest Home is just over $6.5 million in municipal contribution. As of May 31st, Reader Crest had spent just about 34% of its municipal contribution, which is around $512,000 under budget, much of which is related to an increase in funding over what was budgeted for this year, as well as staff wages in various departments. And I'm happy to take any questions if there is any.
Thank you, Ms. Keys. Are there any questions from the committee? Councillor Amos.
Thank you, Madam Chair, and through you. You had mentioned in your budget that you're underspent. A good chunk of it is the staff wages. You had in here $447,000 underspent for Director of Care, Medical and Nursing. Is that based on you're that far understaffed, or is there the shortage of nurses is continuing?
So there continues to be staff challenges, but this underspend in regards to nursing, you'll remember there is the 4 hours of direct care funding that has come down from the province. We are in the second phase of that. The final phase will be next year. The home, it's on a sliding scale, that funding, so we don't know exactly what we're getting from the province, and we did receive more funding than we anticipated for that level of care funding. So that is quite a big chunk of that underspend for nursing. We are working on those positions for next year, so hopefully we will utilize that budget. It's unsure at this time if that will go back to the province once reconciled at the end of the year. We're not certain of that, and the province has not really let us know concretely what that's going to look like. And then there are some vacancies in nursing positions, but just a few part-time positions at this point, so doing very well.
Do we know if I know you just answered that you don't know if the province is going to claw back any surplus. Can the surplus be utilized in any other form? I just hate giving money back.
I agree. The direct care funding is very specific to just PSWs, RPNs, and RNs at this point. There is an allied health professionals funding, which is a separate tranche of funding, which has also come through, which we are utilizing fully at this time as well. But it is very specific to those nursing positions at this time.
Do we know if we were to submit a letter of to the ministry asking for a variance in that to be utilized in another aspect? Is that a possibility?
It's not a possibility in the policy now, but it is a very new initiative, and we're still only halfway through, so what that's going to look like, I'm not certain. Would be very nice to be able to spend that money, we're hoping, in other areas within the nursing department.
Thank you.
Okay, any other questions from members of the committee? Councillor Shaves.
Thank you. In reading the report, you had mentioned there's a lot of different COVID modifications. And if I read it correctly, in regards to vaccinations, they're no longer needed even for employment. Is that correct? And that will that affect staffing?
Yes, that is correct. We no longer have a policy surrounding COVID-19 vaccination and it being a requirement for employment. So we have discontinued that policy. We had one individual who was previously hired with us who did not work during the COVID-19 pandemic, who has now returned to the home. And we have seen staff that are coming on in terms of recruitment, who some are not vaccinated and who are applying now for positions. So there is definitely an increase there.
Okay, thank you. I also noticed within the report there were 3 medication incidents. Should these be happening, and is there follow-up?
So medication incidents unfortunately do take place and they vary in terms of what that looks like. Sometimes it's a packaging error, sometimes it's a timing error in terms of the time the resident may have received the medication, and it can also be a destruction error. So we do note every medication error. We follow up with the pharmacy, and that is documented in our electronic policy. As well, there is follow-up with staff if that is a staff incident which took place. If that's the case and there is resident impact, we do involve the Ministry of Health at that point as well.
Were any of these impacted by the residents?
No, there was no impact to residents.
That's good to know. I also know that during a tour by the ministry, there was an incident in which the medication cart was left unattended. Was this related to any of the 3 incidents?
No, that was a separate incident. So the ministry, when they were doing their inspection, did note that nurses, 3 nurses on 3 separate occasions walked away from their medication cart and did not lock the cart. And that is our policy, and that is expected by the Ministry of Health as well. So that's where we were noted to a written notification for not having safe storage of drugs. There has been follow-up with all the registered staff in regards to that incident moving forward.
Good, thank you. I also noticed that there were proposed amendments to the Ontario Regulation 246-22, one being amending staffing qualifications. Would this help in regards to our staffing situation?
So not at this time. The staffing qualification amendments that took place in regards to the new regulations are specific to certain positions, so management positions within housekeeping and laundry, as well as the dietary department. There are some amendments as well, longer periods of time for food service workers to obtain qualifications. Our current staffing, they all have the qualifications needed, so it's not impacting us at this point. There are some other amendments for the administration of drugs to patients by PSWs. That is not something that the home has undertaken at this point. There is a lot that comes with that in terms of education and follow-up of staff. We are not seeing the need for that at this point because we do have a good complement of registered staff, and it's not felt that would be required by PSWs.
Okay, thank you. One last question, at least for you. Another amendment talks about bolstering residents' experience, such as air conditioning and other factors. Will this have a cost factor on the home?
There is no cost factor to the home because, as mentioned, we are fully air conditioned and have been for many years within our home, so we do meet that qualification. So we're not anticipating any cost there. As well, there was some changes to policies in terms of medication management and wound care, but we have already had those implemented into our current policies that we're utilizing, so there's no change there as well.
Okay, thank you.
Okay, thank you. Do any other members of the committee have questions? Okay, then Councillor Ridge, I'm going to ask you to please assume the chair role momentarily because I have a couple.
I take the chair and recognize you.
Thank you. So my first question has to do with your occupancy target, and I'm just wondering what happens if you don't meet that?
Pre-COVID, the occupancy target has been set at 97%. If a home was to come underneath that 97%, there was impact to the funding received by the province. That has changed over COVID when admissions were not able to take place because homes were in COVID outbreak. It was set for this year that the 97% target was to be back in place. We have not seen that in many homes, and so the province still has not redacted funding at this time either. So we're happy to be meeting the 97% target, but we're not certain if there's impacts at this time moving forward for this year, for 2023 anyways.
Okay, thank you. I also note in your report there were 2 falls. I'm just curious what caused the falls to happen because it looks like there were some serious injuries. So could you just explain that a little bit more?
Yeah, so there are unfortunately a number of falls that do take place in our home at any given time. Some of those falls do result in hospital admissions for things such as fractured hips. Some of those falls are rolling out of bed. A lot of those falls are people wandering with their dementia, seem to wander on the floors quite a bit. Our hallways are long, people get tired, and unfortunately they end up falling. Anytime a resident goes to hospital and there is a change in their status, we do report that to the Ministry of Health through a critical incident, and that's what you're seeing in the report for the 2 falls.
Okay, thank you. It's unfortunate. I do realize it can occur. So my next question, I'm really glad to see that you've got placement students with a focus on restorative care and physical activity. My question is, can you please clarify, and I'm recalling this from past reports, just how much activity is actually allotted time-wise for each resident?
So there's not specific time lots for each resident. We try and involve residents at least 4 days a week in programming. Some residents, of course, are interested and others are not, so we do try and encourage as much as we can. But between our restorative care, between our physiotherapy, and between our life enrichment team, which also involves volunteers, there is a number of hours per week that we do have in terms of programming for individuals. Some of those are group programming, some of those are individual programs.
So I think maybe just to clarify, I seem to recall that the funding was for about 30 minutes or so of physical activity. Is that correct, or physical therapy?
So physiotherapy, yes. I'm not certain of the exact number. I'd have to go back and look at that funding policy, but there is a certain amount of physio allotted per home per week for physiotherapy. Yep. And not every resident is involved in physiotherapy. That is based on their needs at the time.
Okay, because I'm just, obviously with the benefits that come from physical activity for, a number of the things that you mentioned in your report, so diabetes, skin care, stress, cognition, and the Canadian Society for Exercise Physiology, of course, recommends a minimum of 150 minutes per week. I was just curious, in terms of the long care perspective, if you're able to sort of meet that recommendation with activity levels for residents.
Yep, and I can get you those numbers for certain, but we do have a physiotherapist on site 3 days a week and four physio aides on 5 days a week, making sure that those care plans are followed for physio requirements, but I will get you those numbers.
Thank you, I'd love to see that. And I have one last question, and it's with regards to the bariatric beds. So you're getting 3 bariatric beds. So my question is with concern for staff, because obviously there's increased risk with management of bariatric clients. So my question is sort of what's being done to ensure the safety of staff as well in terms of management of bariatric clients?
Yep. So we are seeing a number of applicants, an increase in applicants, especially over the last 10 years, that are requiring bariatric care. Many homes aren't able to provide that, so you have seen in the report that we did apply for that local opportunities funding specific for bariatric equipment, which did involve beds, mattresses, shower chairs, dining chairs. Some of our bariatric residents are able to mobilize and or move independently. Others that are not able to, we do ensure that they are in a room with a ceiling lift that is installed into the ceiling. We do have a portable bariatric lift that we did purchase a number of years ago that is available to be utilized as well. And we do ensure that staff are trained by our physiotherapy team actually on an annual basis, and that involves lifts and transfers for bariatric care as well.
Wonderful, thank you. That's all my questions.
I return the chair to you.
Thank you. Okay, so no more questions from the committee. Are there any questions from the public?
Madam Chair, there are no members of the public present.
All right, wonderful. So that report was for information purposes only, so I just need a mover and seconder to rise from the Board of Management for the Reader Crest Home. Councillor McLaren, Councillor Ridge, thank you very much. All in favor? Wonderful. Thank you, Ms. Keys. I really appreciate that. Okay. So now we are moving on to our briefing. So over to our wonderful financial team. So Ms. Kennedy, are you taking the lead on this?
I am taking the lead, Madam Chair. Thank you.
Go ahead.
So thanks very much. So we've got a two-part briefing tonight. I thought I would start, and I'd like to just provide some very high-level highlights of the audited financial statements for 2022 that are before you tonight. And then I'll be turning the floor over to the folks from KPMG who would like to present their audit findings report. So I thought, in terms of starting with the financial statements, the first point I want to make, because it always catches everybody, including me, with some of the questions I ask, is that these financial statements are not just the City of Kingston. They are consolidated statements, which means that agencies that are either owned or controlled by the city are also included in here. So operations for DBIA, the Library Board, the Kingston Frontenac Housing Corporation, our proportionate share of the public health unit, as well as the water, sewer, and gas operations that are operated by Utilities Kingston are all consolidated within here. So that does throw the numbers a little bit from what you might expect from some of the other things that you've seen from us. The other point I'll make, and then I will leave with the folks from KPMG to talk more about, is just that we do have a clean audit opinion on these financial statements, which is good news for you and probably better news for us as staff as well. And so I want to start with page 22 of the agenda, which is our consolidated statement of financial position, or if you're old like me, it's the old balance sheet. I still like the term balance sheet, and I still call it that. It is page 22 of the agenda, and this statement provides information on our financial position for the city, the consolidated financial position at the specific point in time, so at December 31st, 2022, and basically represents the economic resources that are controlled by the city. So in a nutshell, that's what the objective of the statement is. In the context of oversight of the municipality's financial health, it confirms the extent that the city has the necessary assets to continue to provide future services, or, and in the case for us, that there are sufficient future revenues to cover existing liabilities, and I'll explain that in a moment. So in terms of some of the highlights with respect to our financial position, you can see at the very bottom of that sheet, we have a municipal equity position of about $1.8 billion, up about $75 million from last year. That number does not mean a whole lot sitting on that financial statement. I'm going to end this briefing talking about my favorite piece of paper in this whole set of financial statements, which is the statement of municipal equity that breaks that down. So I'm going to come back to that number in a moment. You'll also notice in there that our long-term debt has gone up. For some council members that were here earlier in 2022, we did do a debt issuance of about $135 million. The last of our debt that council had approved that had not yet been issued. So all of the debt that's been approved was issued with that debt issuance in 2022. A little larger than we normally would, but you'll recall rates were really favorable and they were starting to go back up. And so early 2022, we took the opportunity to issue everything that was remaining. So you will see the debt go up. You'll see the temporary loans coming down because we basically turned that construction financing into long-term debt. The other interesting number on there that stands right out is the tangible capital assets, and there's lots of information for anybody that's interested on those assets and those values in note 17. But basically, we have a cost value of our assets of just over $3 billion. So that is historical cost in terms of purchase cost of those assets or building cost. And after depreciation, a value of about just under $2 billion. So it gives you a bit of an idea even as to the state of our assets currently. The other interesting number that I just want to point out is about 2/3 of the way down, the net financial debt number. And you'll see that's about $199 million. It's net financial debt as opposed to net financial asset. This is the difference between our total financial assets at the top and our liabilities. And the main reason that is in a debt position is because the debt that we issue within the liabilities is used to purchase our assets, but our assets are below that line. So you have the debt above, but you don't have the asset until below. So that really is what creates the debt. But that's the number when I said that this statement also provides information to ensure that future revenues are available to cover existing liabilities. So basically that line means we have $199 million of revenue that we are going to need over the next few years to pay off that debt. So that's how that is interpreted. Not a bad thing to have that because there are good reasons to issue debt. But along with that, obviously, if you have that line negative, there needs to be a debt management plan. And the committee members will recall some of the capital funding models that Lana maintains and that we present at budget time on the funding and the debt side in terms of some of those strategies. So we do have a plan in place in terms of how those debt payments are going to be made in the future and that the dollars are there. So So just going to the next page, which is the statement of operations, which is basically our revenues and expenses. I will be honest, I do not find this to be a very useful statement for council. I'm old, so I was around when they went to this type of statement and the Public Sector Accounting Board reporting policies. And the idea is that if you're looking at a public sector statement like this, a municipal statement, or you're looking at a private sector statement, that there's not a whole lot of difference. So full accrual accounting, which means, for example, amortization of assets. So we do not ask for a budget approval for depreciation of assets. You won't see that in the budget documents. We don't raise taxes to pay for the amortization. But on this statement, it is an expense that has to be included because it's full accrual accounting. And it does present a true picture of what the costs were. There was a cost of those assets in providing a service. That cost is included in there. So from that perspective, it does make a lot of sense. But in a world where we live basically on a cash basis, where we raise taxes, and then spend the money, it doesn't fit in here quite as well. And I do refer you back to the fourth quarter operating report that we brought to council back in not the last meeting, I think it was, yes, which is more our cash basis world. And I'll show you in a minute where that connects up to this type of reporting. The other piece that I just want to point out in here, because it's a little different, you'll see our annual surplus is about $76 million. You'll recall the surplus we reported in the June fourth quarter report that we brought was a little less than $2 million. So again, doesn't align necessarily with our tax world and our cash world. One of the things that drives that number, two things that drive that number actually. One is the grants that we get for capital. So we don't have capital expense in here, we only have amortization, but we do have all the grants in showing as revenue. So that drives that number up. The other thing is that the money that we raise from taxation that goes into our capital reserve funds, including the 1% capital levy, the revenue is in the taxation, but the transfer to the reserve funds is not in the expenditure. It is not considered an expense under public sector accounting. It's us raising money for ourselves and putting it over in a different bucket for capital expenditures. So some of those things drive these numbers, but in our world, doesn't necessarily align with our day-to-day. So just some caution in terms of reading that. So then finally on to my favorite one. So I'm going to skip a couple of them and go to the consolidated schedule of municipal equity, which is page 25. So this is a schedule actually that we created way back when the public sector accounting principles came into play to try to take the accrual reporting that was required and link it back to what we're all used to seeing and what you would see in the fourth quarter report. So you'll see the almost $1.8 billion has been broken down in this schedule. The top box, or the top section called current fund surplus deficit, if we've done everything right and balanced, that 1.4 million is what you would have seen in the fourth quarter report. So there's our actual surplus that council saw in the fourth quarter report, and that gave us approval to put into the working fund reserve, that $1.4 million. Same thing with some of our consolidated entities in there. So you will see water, sewer, gas. Those don't tie in directly to what you would have seen in the fourth quarter report because on the utility side, they actually accumulate some of those numbers like you would see in a private sector. We don't do that. You'll see in the fourth quarter report, we asked for all of the surplus to be put either into capital reserves or into the working fund reserve. So you'll see the prior year is always zero. And then you can see, of course, what the other agencies would have reported. So that's the first piece that links us back in. The other piece that I want to just talk about is the reserves and reserve funds at the bottom. So this is part of our equity, or the net value that the city has control over. So you'll see our total reserve funds of about 348 million, the majority of which are our capital reserve funds. And again, you'll recall the schedule that was in the budget binder that showed a very detailed breakdown of each reserve fund, including all the capital reserve funds and the balances of those over the 15 years. The only other thing I want to just mention, there's nothing in the notes particular that stands out, except you will see note number 20, which I think it was a different number last year, but a similar note in last year's financial statements as well. And this was with regards to the Kingston Frontenac Housing acquisition of assets from the Kingston Municipal Nonprofit Housing Corporation that actually happened in 2021. And so that note is back in there again this year. It's a very detailed note only because the actual transactions are netted out because Kingston Frontenac Housing is consolidated in these financial statements, so everything is netted out. But we did want to ensure that we had those transactions reported for full disclosure, and so you'll see that in the note. So I will end with that, and I'm hoping that we have somebody from KPMG on the line. I'm assuming our partner, Ms. Laura Huber, is here, and she is just going to go through the audit findings report.
Thank you, Ms. Kennedy. And you are good with numbers. You came in under time. All right, so over to KPMG.
Okay, good evening, everyone. Thank you, Madam Chair. It's our pleasure to be here this evening to walk you through the highlights of our audit of the city's consolidated financial statements for the 2022 fiscal year end. Here with me this evening is Caitlin Cox. Caitlin is a senior manager working very closely with myself on the file. So between the two of us, we will walk you through the highlights of the deck that was pre-circulated as part of your package for this evening's meeting. So with that, jumping into it, in terms of where we are today with respect to the audit, is we are essentially complete, save for the ordinary customary items that we would expect to see at this stage. The audit window will stay open until council does accept and formally approve the financial statements, which is slated to happen in early August. So to the extent anything significant happens in this intervening period, which we certainly aren't anticipating, we'll certainly stay close with management to make sure that there's nothing that might have any implications on either the financial statements themselves or our audit report. At the time of the issuance of our audit findings, you will see I am on page 69 of the deck. We have, as part of the standard audit procedures, is to issue legal inquiry letters. Those have now been received, and certainly nothing significant to apprise the committee with either. So we are essentially in a holding pattern subject to the conversation here tonight with the committee, and then ultimately looking for council's final approval on the financial statements. Next slide on page 70 is new and different this year. And what it does is really try to marry up all of the significant components of our audit plan that was formally presented to this committee back in the fall. It does feel like it was quite a number of months ago now, but certainly really to say all of those key concepts that we had discussions with the committee at that time from a planning perspective in terms of what we planned versus where we completed. You can see on the right-hand side, essentially no significant deviations from plan. A lot of the audit effort really does come in subsequent to the audit plan and really happens in the March-April window, and certainly nothing significant to bring to your attention here tonight with respect to that. So with that, I will pass things over to Caitlin to walk you through the next few pieces.
Perfect. Thank you, Lori. So I'll pick up on page 71 of the package, titled Significant Risks and Results. And this is essentially the one risk that is a presumed risk for all entities. So I always like to start by saying there's nothing specific at the city that has led to us flagging this risk, and it relates to the presumed risk of management override of controls. To address this risk, we do perform procedures surrounding the financial reporting process, and more specifically, we look at the design and implementation of controls surrounding the journal entry process, and we look at specific entries each year and perform a test of details. I'm happy to report we do not have any findings from these procedures. Moving forward to page 72, this is another follow-up to an item we did flag in our audit plan, which is that there was a new auditing standard effective for fiscal 2022. There is lots of information on this slide, so without going into too much detail, the standard did require that we perform a more granular risk assessment process of the city's internal controls, which did include a detailed look at process activities, the IT environment, and cybersecurity. We did not identify any issues through the results of these new procedures either. The next slide on page 73 of your package speaks to audit misstatements. As we progressed through the audit, we used a materiality threshold of $10 million in the performance of our procedures. This translates into an audit misstatement posting threshold of $500,000, and this is really what's of relevance to the committee, as it's the threshold we use to compile and communicate any adjustments or differences back to the committee. As you can see on this page, we did not identify any differences that remain uncorrected. We did identify one misstatement that was communicated to management and subsequently corrected in the consolidated financial statements related to a disposal of a tangible capital asset, and the details of this entry are included in the management representation letter in Appendix 1B. Moving forward to page 74, related to control deficiencies, in our role as external auditors for the city, we are also responsible for communicating any significant deficiencies and internal controls that we identify throughout our audit procedures that we would like to flag to the attention of the committee. Once again, there's lots of words on this slide, but I'm happy to report we did not identify any deficiencies in internal controls which warrant your attention for fiscal 2022. Moving forward to page 11 of our report, we highlight that there were no new accounting policies or practices implemented in fiscal 2022. You will see on the bottom section here, we have highlighted there is one new accounting pronouncement that will be effective for fiscal 2023 related to asset retirement obligations. This will be a fairly significant project with large financial reporting implications, as it does require management to estimate any retirement obligations associated with assets that are held by the city, which includes things such as asbestos in buildings. There's lots of details on this standard in Appendix 3 for your information as well. I will highlight we have been living and breathing this standard over the last few months as it was applicable for the March 31st year end. So we do have some experience under our belts now and we'll be able to support management with the implementation of this standard. On page 12 of our report, we have highlighted that the financial statement presentation and disclosure does comply with the financial reporting framework for the city, which is public sector accounting standards, and we have no other financial reporting matters to highlight to the committee's attention. On page 77 of the package, or page 13, if you look at the bottom right corner of our report, this slide highlights the other audits and reviews we have completed or will be completing in the upcoming months in addition to our audit of the consolidated financial statements for the city. I'll now hand things back to Lori to walk us through the remainder of our report.
Thanks very much, Caitlin. That takes us to page 78 of the deck, which should say audit quality at the top. So this wheel that gives the committee members sort of a little bit of insight in terms of what we do in terms of audit quality. What we've done that is new and different this year as part of our audit findings to assess the quality from an audit perspective are 6 key indicators, and you can see each of those there on the slide on slide number 79. And in each of these items, it has been fairly effective to essentially rate each of these KPIs in terms of audit quality. So as an audit committee member, you can see out of all of the 6 KPIs, we've certainly rated all of them green. You can certainly get a flavor of the spirit of our report here this evening in the sense that it really was a clean, good audit. And so really from your perspective, all of the things that we expected to see when we expected to see them certainly was full cooperation on the part of the team to get us where we are today. That takes us to the appendices, and I'll just stop really briefly on page number 81. Just as a reminder to the committee, in order for us to be engaged as your external auditor, we need to be very much mindful of our independence as that third set of eyes really on the financial statements and the financial reporting process. So to the extent that we as a firm, being KPMG, provide any non-audit services to the City of Kingston, we need to be very much upfront, open, and transparent with respect to those to the extent that they might be thought or seen to encroach on our independence. I'm pleased to be able to report here this evening. There's certainly nothing from a non-audit perspective that might cause us any concern relative to our independence. And really all of this culminates into what you see on the following pages, which is what Ms. Kennedy had alluded to in the draft financial statements, which is our ultimate deliverable upon execution of all of our audit procedures, which is our draft independent auditor's report. So as was mentioned, it is in draft, subject to council's final approval of the financial statements, but it is a clean opinion where we state that in our opinion, we believe the financial statements do present fairly in all material respects the financial activities of the consolidated City of Kingston financial statements for the year ended December 2022. It does go on to include the responsibilities of management relative to the preparation of the financial statements, along with your own being those charged with governance, and certainly our own as your external auditor. It is a lengthy report, but this is very much a standard clean audit report in Canadian standards as they are today. So with that, the balance of the deck is really more informational items, not certainly specifically unique to the City of Kingston, a little bit of preview in terms of some of the things that are coming in the future for fiscal 2023 and beyond. But perhaps, Madam Chair, we will pause our presentation here and welcome any questions from the group.
Thank you very much, Ms. Huber and Ms. Cox. You also were under time, so I think that's a testament to being cognizant of numbers. So with that, I am going to move to the committee to see if there are any questions. And these are questions with regards to the briefings. You have 5 minutes, 2 questions each. Councillor Shaves? Yes, 2. We will come back to the actual report, but these are questions specifically to the briefings we've just heard.
I think I can find 2 questions directly related. Regards to the consolidated financial position, the cash and short-term investments, $254 million. Appears to be a lot of money sitting around where I could think of a number of places that could be invested in, such as roads, parks, recreation, a few other things. Maybe you could share what that involves, please.
Thank you, Councillor. So just to start off, first of all, in terms of that cash, so in terms of where it could be used, that cash relates to the municipal equity at the bottom. So we have, for instance, we have reserve funds, and those monies are invested up within the cash or the long-term investments. So it's not like that's extra revenue. That is just the asset that relates to the revenue that's sitting in, for example, the capital reserve funds. In terms of the value of it, and $254 million sitting up in cash and some short-term investments. So a couple of things there, just to note. So we do have as well, you'll see I think it's a $10 million increase in the long-term investments, just a little bit farther below. So we do, in managing our cash, do some transfers back and forth between the short term and the long term. Our long-term investments through our investment brokers like us to be able to commit to at least 7 years for our long-term money because of what they're investing in. But also as well, over the pandemic and even prior to the pandemic, we have used some strategies around whether it's better to even leave money sitting in a bank account. And so we work very closely, and Ms. Folds manages these funds with our investment brokers. And quite often in the past, we've actually moved money from long-term investments when it matured and moved it into the bank because we were doing better sitting in a bank account. So some of that has impacted that. The other thing that I would say has impacted it that is now over, and I think Lan and I will be certainly taking a look over the next few months at our long-term investments, is we were keeping some liquid assets throughout the Third Crossing project. We had $120 million coming from federal and provincial, and we had been warned very early on from other municipalities with that type of funding, don't anticipate getting it too early. There's a long time between when you've spent it and when you're going to see those monies. And so a lot of our strategies over the last 3 years has been about keeping more liquid resources than we normally would have, because we were concerned about that in terms of making sure we had enough money to pay the bills, knowing that 2/3 of those invoices we weren't going to get the monies back. And I can say, actually, we were pleasantly surprised. We worked very closely with both governments throughout the whole project, and we did not have as big an issue as a lot of other municipalities had. We got to know their financial analysts very well on a first-name basis, and our claim process was very, very smooth. But that was another reason why those numbers were staying higher in either the cash or the short-term investments. We will be looking at that now that that large project is done, whether there is some ability to move other things back into the long term, noting that long-term investments haven't been doing very well the last couple of years either. So it's all about the timing of when we might do that. So that might have been a little longer answer, Councillor, than you were looking for, but.
No, so to confirm, I understand that probably a lot of those funds are probably tied up into projects were probably still pending, because some projects go from loop from 1 year to another year, but some of them may be over. I was wondering if any funds are available that's available in this fund, the cash and short-term investments that we could use in this year's budget, even though we just declared it.
So thank you. So what that would mean is it would mean a motion from council to approve to take monies out of the reserve funds, more monies than what's already been approved in the budget, to go towards something like roads. So it doesn't really impact in terms of what's in the bank. That's just how we're investing those funds that are sitting in the reserve fund. It would actually mean council doing a motion to say, looking at those capital reserve fund balances and saying, we want to move more of that and do more roads work out of those reserve funds.
Okay, so I'm looking at the wrong account for right now.
I'm sorry?
So I'm looking at the wrong account in order to get funds. Okay. I'll ask more questions the next round. Thank you.
Okay. Anyone else from the committee? Councillor Ridge first.
Thank you, Chair, and through you. So I'm looking at the KPMG report, Appendix 1B, Management Representation Letter, Attachment 2, Summary of Audit Misstatement Schedule. So there's $1.4 million misstatement or corrected audit misstatement. So I'm just curious if it could be provided with a little more detail about that particular misstatement, please.
Madam Chair, I'm going to turn that over to Ms. Folds.
Go ahead, Ms. Folds.
Thank you. Through you, Madam Chair. So it was a process error. The net impact to the financial statements in the tangible capital assets was net zero. And so when the entry, we have all of our information residing in a special purpose ledger. And when it was translated over into our general ledger, it was missed as it was reconciled on the net basis. We've since updated our process to ensure that we are reconciling at the gross level, both cost and accumulated amortization.
Okay, thank you very much.
Okay, are there any other questions from committee on the briefing? And Councillor Amos.
Thank you, Madam Chair, and through you. A letter or a note for KPMG staff. Will a management letter be accompanying with this audit on any recommendations for the city management team to review and think about?
Go ahead.
Yes, through you, Madam Chair, we typically will issue, so formally, as part of our audit findings report, we are required to share with you any significant deficiencies in internal control. To the extent we identify any areas of best practice or any areas of performance improvement, we do that through a management letter that goes directly to management, subsequent to the final release of our audit report. So one will be forthcoming as part of the 2022 audit.
Thank you. And as a due diligence, I know this is question 2, but it's not meant to be question 2.
You'll have a chance to ask some other questions in a minute.
As a due diligence on council's part, does council see that management letter?
Thank you, through you, Madam Chair. So no, normally they do not. I have it in front of me actually in draft, and I can share the couple of points that are on it. They tend to be more process-related issues. If it was anything more significant, then the letter would come as part of the audit findings report. The one thing that was on the 2022 observation was about our site plan deposits and recommending that we do a little bit of work, which I think is already underway, to review a number of older balances that are sitting there to determine the status of those and whether we should be writing those off. The other piece that came on from a prior letter that is also in process is some of our administrative access to our financial system. And as you may recall, we are doing a major upgrade right now to our financial system. And so looking at the security roles and the administrative roles is part of that process. So that's still outstanding because we did hold that until we were actually doing the upgrade. And then I think the only other thing, there was a couple of reporting items that have been addressed. One around our employee future benefits and making sure we had a proper update for those, and we do for these financial statements. There was a full actuarial evaluation that was done. And then we're also been, Ms. Folds has been working on looking at the relationship with all our agencies to make sure that we are doing the proper consolidations with our agencies. And so we've reviewed those again. We're comfortable with what's in the statements this year, but she's continuing to look at those from the accounting requirements, whether or not there is an actual control of council and are we actually consolidating the right entities into the financial statements.
Thank you. Can I ask one more? Or am I done?
You can squeeze one more in there. I'll consider that a part A and B. Go ahead.
Okay. Such leniency, thank you. In regards to, I want to skip up to page 25, and this could be for staff or it could be for KPMG. I look at the various organizations that are coming in through the current fund surplus line at the top of that page, and I know that KPMG does not do all of those audits, and I know that Ms. Kennedy just indicated that Ms. Folds works very closely with all of those organizations to try and have a smooth audit. But are there issues there when those organizations are not the same auditor as the city's auditor? And should they be?
Through you, Madam Chair. Actually, I believe now all of the agencies are now audited by KPMG. We do not have any issues, even if it is a different auditor, as the standards are quite clear on how the financial statements should be presented, and that's what we use to consolidate into our unconsolidated statements of the city.
Perfect, thank you.
All right, Councillor McLaren, you're the only one who hasn't had anything to say. Do you have anything to add?
I'm good, thank you.
Okay. With that, then, we're finished with that portion. We're moving to the main reports of the audited financial statements and other financial information of the Corporation of the City of Kingston, year ended December 31st, 2022. The report's attached. It's already been introduced via briefing. So, committee, we can go to round 2 of questions. Councillor Shaves.
Thank you. Staying on page 25, as Councillor Amos was last on, I noted the current fund surplus, grand total of $24 million. Would this be the area which we would be able to redistribute? These excess funds?
So that 24 is made up of some of the other agencies. So the 1.4 million of general operating surplus, which has now council has approved go into the working fund reserve. Yes, council could take that 1.4 million out of the working fund and they could use it to do other activities, roads or whatever. The water, sewer and gas, they do also have the ability to do that. I'm hesitating on that one, as I know we did a legal opinion a number of years ago on whether there was the ability to do that because those monies have been collected from ratepayers. But ratepayers are also taxpayers. So I believe at the time the legal opinion was that we could do that there was the ability for council to move monies from the water, sewer, or gas. The only caution, obviously, I would say with that is as much as we have our financial planning models for the city, Utilities Kingston has the same thing for water, sewer, and gas. So, taking money out of their capital reserve funds or their accumulated operating surplus is going to impact other things in terms of the management of those funds.
Thank you. And I was just wondering, were you able to find out as to why the downtown business improvement areas a deficit of $43,000?
Through you, Madam Chair. I haven't heard back yet. A quick review of their financial statements was that they're levied, as they have a separate taxation levy on the downtown businesses, was a little bit less than their expenditures during the course of the year, but I will get more detail on the specifics.
If I could just follow up, and you may not know this answer at the current time, how much money does the City of Kingston forward to the Downtown Business Association?
Through you, Madam Chair, it's approximately $42,000 of property taxation from the City of Kingston for the 2022 fiscal year.
Okay, thank you.
Okay, any other members of committee with questions? Councillor Amos.
Thank you, Madam Chair, and through you. Now that I know that all the organizations on page 25 are with KPMG, do each of those organizations engage KPMG in their own way, or are there efficiencies to be found since all of those organizations kind of report to the city of Kingston? Would it not be more potentially efficient in a bidding process to have if said organization, i.e. KPMG, bids, they are bidding on the whole kit and caboodle and not just the city of Kingston, and then they bid on the downtown BIA and Kingston Frontenac housing? Is there efficiencies there to be had?
So thank you, Councillor. So I will start, and Ms. Humer may want to add to that from KPMG's perspective. But so just so that committee members are aware, when we do go out for proposal, I don't think we include all, but we include most of the agencies in our request for proposal when we go out for proposal for audit. So we do get fees back on individually on each of these agencies. And we are actually involved working with KPMG on a number of them, particularly the ones like the library. We actually are doing the accounting for the library, and so we're involved in the audit. So I think at the end of the day, they still all have to have a separate audit opinion. They still have separate financial statements, but maybe I can turn that over to Ms. Huber to add to that in terms of the efficiency piece.
Go ahead, Ms. Huber.
Sure, thank you. I can certainly speak to those individual entities. We did the competitive bid process. Interestingly enough, as you saw in our audit planning report and our audit findings report, the City of Kingston's financials are certainly quite large relative to those individual entities. So when you request us to opine on an individual financial statement that is quite small in comparison, although they would be insignificant to the city, they have their own levels of materiality and significantly more detailed work than maybe perhaps one might appreciate on the surface. So I'll leave it at that, which is, I think, what Ms. Kennedy was alluding to. The only other piece that I would say that was not in the city, and certainly most of it is me except for utilities, Kingston and Frontenac Housing Corporation is a separate legal entity with the city as the sole shareholder. However, every 5 years they undergo their own competitive bid process, and they have done that most recently. I believe it was actually in 2022. So that would be the other more significant item as part of those individual entities that culminate into the consolidated piece for the city.
Thank you.
Thank you. That leads into my next point in that I see that we have extended our, and this is, I would say this to any organization, so KPMG staff, please don't take this personally because I think you're a great organization. It's, we have extended KPMG's agreement with the City of Kingston to 2024 at the closure of December 31st, which...
Thank you, Councillor. So yes, we will do a full market proposal, starting with the audit for the 2025 fiscal year. And we probably will go to market sometime early in 2025 so that the appointment is made well before any interim audit planning would be done.
Thank you. And how long would we issue that tender for? 3 years, 5 years?
We haven't talked about that, but I think my preference would be to do the 3+2 again. You can't do more than 5 years, so there is that qualification, but I think doing a 3 and then having that ability to extend 2 more, it does have a point in time where we can stop, we can look at the services, we can look at fees, and normally when we do that, we would reach out to the auditing firm and ask for fees for the next 2 years, and then we can do some comparative on that to make sure we feel we're still getting good value for service for that last 2 years. So that seems to work very good, and it just gives us that touch point after 3 years to make sure that that things are still good for another 2 years.
Perfect. Thank you.
Okay, thank you. Any other members of the committee? All right, Councillor Ridge, could I have you take the chair for just one moment, please?
I take the chair and recognize you.
Thank you. So I just have one question. It's with regards to the unfunded future benefit obligation, and I'm just wondering what the long-term plan is for managing that.
So thank you. I missed that part on my favorite statement, the unfunded. So the accrual accounting requires that we set that liability up. So we have an actuarial that does all the number crunching for us and tells us what it is, and it gets up as liability. But because we are on a cash basis, the last thing I can do is go out to taxpayers and say, now I need to collect all this money. And so it is good for tracking. I would say there's not necessarily a plan in place in terms of how we're going to fund it. We fund it on an annual basis, and the actuarial folks give us those amounts. Where we do try to manage it is conversations with human resources as part of negotiations. So one of the reasons I think that this became a requirement in municipal financial statements is because it was quite easy going to the negotiation table to give a whole bunch of stuff that didn't cost us anything necessarily today. And so it did start to add up. And so that was one of the reasons where it was, we need to know what this liability is. We need to have an actuarial do the calculation, and we need to determine what is the true cost each year of that service, because now it costs more than just whatever the wage is for that person to be working. There is a future benefit cost as well that should be recognized as that person is providing the service, not after they've retired, if they're retiring earlier, whatever the liability is. So I think from that standpoint, that's why the liability was put in place, but it's not something we can necessarily fund like we do our current expenditures. And so that's why we show it as an unfunded here. But we do actually, as we're doing part of the negotiations, work with human resources to make sure that we're not increasing that unnecessarily in terms of what our negotiations are, and it all related to the benefits. The other piece of it that we don't have perhaps as much control on, though human resources does a lot of work on our health and safety side, is there is the WSIB piece in that as well, because we are self-insured basically for WSIB. Any cost that's related to WSIB, we pay that dollar plus about another 25 cents admin fee on top of that. So that is in there as well as a future cost. And so that one, a little more to get some control over that piece, but certainly Human Resources has a lot of plans in terms of how do we try to mitigate that around some health and safety initiatives that happen every day.
Thank you, Ms. Kennedy. I appreciate that. And I'm done.
I return the chair to you.
Thank you. So with that, we're done questions from the committee. And any members of the public?
Through you, Madam Chair, there are no members of the public present.
Okay, so we are now moving to call the vote on the recommendation that the Administrative Policies Committee receive the audited financial statements and other financial information of the Corporation of the City of Kingston, year ended December 31st, 2023, attached as Exhibit A to report number AP 23008 and KPMG's 2022 Audit Findings Report for the Corporation of the City of Kingston for the year ended December 31st, 2022, attached as Exhibit B to report number AP 23008, and that the Administrative Policies Committee recommend to Council that Council approve the audited financial statements and other financial information of the Corporation of the City of Kingston, year ended December 31st, 2022, attached as Exhibit A to report number AP 23008. Could I have a mover and a seconder? Councillor McLaren, Councillor Ridge. All right. And any other comments from committee? And I'm going to call the vote then. All in favor? Thank you. Thank you, everyone, for the good work. Much appreciated. All right, so we're moving on to Part 8C, tax write-offs pursuant to the Municipal Act 2001. Apparently Jeff Walker is going, thank you. Nice to see you. All right, so I'm going to turn it over to you to address this issue with us. Thank you.
Thank you, Madam Chair. In front of you tonight, you have a tax write-off report. This is a report that comes to the committee 3 or 4 times a year, and it recommends a write-off for properties for a variety of reasons that are listed on the report. Examples of the types of write-offs would be if there's been a change to a property in the way that it's used in the application year, or a change to the property itself, such as a demolition or being damaged in a fire. The report can also be used to correct a clerical error in the return of the assessment roll, and if that's the case, it can either be in the application year or any of the 2 previous taxation years as applicable. There's an exhibit to the report that lists each of the properties that are receiving a write-off to 23 budget, and they're charged against that budget, so there's no further financial implication to the report beyond that. And with that, I'll pass it back to you. Thank you.
Thank you. So any questions from committee? Okay, seeing none. Any questions from the public?
Madam Chair, there are no members of the public present.
Okay, so I'm going to ask for a mover and a seconder that we recommend that the Administrative Policies Committee recommend to Council that Council approve the cancellation, reduction, or refund of taxes pursuant to applications made under Sections 357 and 358 of the Municipal Act 2001, totaling $31,303.84, of which $27,961.69 is the city's portion, and the amount charged back to the school boards is $3,342.15, as listed in Exhibit A attached to report number AP 23007. Can I have a mover and a seconder? Councillor Shaves and Councillor Amos, not to ignore this side of the room. Any comments or questions again? All right, I'll call the vote then. All in favor? Thank you. All right, so with that, there are no motions. Thank you, Mr. Walker, I appreciate that. No motions, no notices of motion, no other business, no correspondence. The date of the next meeting is September 14th.